You saw it during the financial crisis, and you're seeing it again today. Too much leverage and the appearance of cracks inching closer and closer. You came here for the truth, so let me unveil that for you. So let's get into it right away. This chart right here, you're seeing it from 1997 up until present day. But what is it? Well, first, the lighter blue is your volatility going towards zero in recent years. Now the darker blue, what do you think that is? It's margin. The amount of margin that is being used today is at astronomical levels. If you want to invest $100, let's say, but you only have $20 in your pocket, that's not a problem. They'll just leverage you up. And as long as the market continues to rise, there's no problem. However, once we see a little bit of volatility, that becomes a problem very quickly when you get your margin calls and you lose your shirt. But of course, many of the amateur traders that you will see out there have only been in the game a few years, and they weren't even around during the financial crisis. So you will see this as becoming a problem, and the worse that this gets, this chasm in between these two, the worse the crash will be. That's the way it goes. More and more people are taking on more and more leverage. But it's not just individuals. Look at this. This is from one of the government watchdog websites. They had a report here. It's quite large, but I picked out this one important point here. What they're talking about is how there's this massive exposure to leverage, and they actually say that in the top tier, the hedge funds, they've been leveraged about 15 times in recent quarters. Combined, these funds account for more than $800 billion in gross assets. That's 1/6 of all hedge fund assets. That's a very, very big deal when you see how much money is at stake. And even if this were to all be wiped out, many people would say that's nothing compared to what's out there. But it's the domino effect that happens every time, whether it's subprime crisis, whether it is any of the other instances that have occurred throughout history. We see that a problem in one place of the world becomes a problem everywhere else. Look at the dot-com boom that started to gain momentum. Money was being forced in, all that hot money, and then suddenly the markets reacted in shock, even though it was supposedly just one small problem. But that's not the way it works. You'll see that with the different crises that occurred throughout the 90s, in fact, and it goes on. Leverage is a big problem. The more leverage, the worse it's going to hurt. And we can see now, based on that chart I was just showing you previously, that this isn't going to end well. The further along it goes like this, the worse it's going to be. That's all for this video. I'll keep it short. If you found it informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books over at Amazon. Links are in the description below. Take care.